Todd, people absolutely love your service. I've seen some of your live stream videos, and the comments that roll in are just so positive. Tell us what you do and how you keep your subscribers so happy.
Well, thank you. They're not always happy. Usually in our business data, I think you'll know you're only as good as your last trade. No, I think, you know, you got to start with passion. You got to love what you do. I started looking at markets and reading my first technical analysis book right in college. So it's a passion, and I think if you work through your passion, if you make your passion your profession, it comes out. And there are, and what I said in the beginning, you're only as good as your last trade. That's true to some extent. I think if people know you generally care about what you do, you care about your performance and the quality of work you put out, they love you when the markets are falling in our favor and we're tracking the markets closely. But when you're off, which is inevitable in the markets, you're not always going to be hammering it perfectly. They know, they trust you, that you're trying your best and you will ultimately get out of the trough, because just like the market's trading publicly, which few people do, there are peaks and troughs, but if you just keep going, you be straightforward and you be passionate about what you do, then people tend to stay with you for long periods of time.
So speaking of the peaks, what's the best trade that you've had this year so far?
The best trade, I think it was the Lululemon trade. We actually did a video. The crack team at EWI did a nice video on Chart of the Day on a Lululemon options trade. It was an option butterfly that is basically a short volatility trade, and what that means is it's negative vega, which volatility will come off post earnings, but if you combine that with the directional bias, which was given to us by the upside wave and fib projections, we basically put a trade on saying Lulu should move up to this point. On a directional basis, we hit it, and then on the volatility collapse, which happens after every earnings report, we got that side as well. So it was just an earnings trade. I think from a general stock market direction point of view, haven't had some really awesome trades I'd love to tell you about, more so last year on the short side, but it's been kind of one-off individual equity trades this year.
You and EWI have a lot going on together. Tell us about that.
Yeah, it's been an amazing opportunity that I have. There's a lot of businesses like mine who kind of operate what I call lovingly under the mothership, which is EWI, and I had the opportunity. Actually, I asked Bob Proctor if I could come down and interview him on the 30th year anniversary of the '87 crash for my Elliott Wave Mastery training course, and somehow I impressed the big boss, and a nice relationship was born. We're coming up on 2 years. I represent EWI as somebody who actually puts real money in the options and stock market behind our wave counts, and it's been a great relationship. So I have all sorts of things going on, working with the Chart of the Day team, working with Jeff Kennedy over in Traders Classroom. I've done a couple of YouTube live streams with your analysts in-house, and yeah, it's just been awesome. So yeah, there's just all kinds of things going on with Elliott Wave International. I'm really fortunate.
You mentioned options, Todd. How did you first get involved with options?
Oh man, my first experience with options was St. Lawrence University, 1999, birth of the bull market. I was trading like a $2,000 E-Trade account in college, so not really enough money to trade options, but our Professor Morell, I think it was Economics 301, he gave us a $100,000 fictitious portfolio, and I was just loading up on AOL call options, and I took my $100,000 account and made it into $1 million. And I hope this doesn't jeopardize my relationship with EWI, but I didn't go to very many college classes. It was more focused on the other things. But anyways, I think I got out of there with like a 3.5 because I increased my options account by tenfold. Anyway, so that was my first experience into options, and then I started prop trading right out of school for a proprietary firm, and we were using some hedging strategies, which is specifically married puts to be short on downticks as I was sort of starting out day trading, short-term trading the markets. It was a kind of a hack for day traders to be short on downticks. It's very specific. And then as I grew older, I wanted to try to hold positions outside of scalping for a dime or a nickel or a quarter in the day trading time frame. So I wanted to try to find ways that I could hold positions based on Elliott Wave analysis for a longer period of time. And naturally, options trading comes in because it allows you to define your risk, trade with a bigger strategy, hedge yourself if a particular wave count doesn't unfold as you would expect. So it's just options and Elliott Wave go together extremely well.
You know, Todd, I think the fact that you pulled away a bit from academics probably ups your value and coolness factor at Elliott Wave, actually.
I don't believe, thank you, but I don't believe that. I read some of the work at the team at Elliott Wave, and I'm like, oh, these guys are so extremely intelligent. You know, I think that's maybe why I have the relationship with you. I'm a humble guy, and one of the most profound experiences for me as a trader was after I left prop trading. I wanted to come back east. Basically, I was on the West Coast. I made a stop in the pits in Chicago. I had a couple of buddies who are locals in the NASDAQ and the S&P futures pit. And some of these guys are just seven-figure traders. And I mean, they're just blue collar guys, no judgment at all, just not what you'd call academically, accelerating the academics, but they're street tough guys who are used to being wrong, have no, they can look at themselves in the mirror after a series of losing trades and they don't feel any worse because they're just used to it. So I think that the trader is not necessarily the smartest guy in the room, but there are some of the smartest guys in the room at Elliott Wave International, and I rely on their analysis, and then I just kind of bring it over to the market as a non-arrogant or drop the ego and just say, this could happen, and I'm prepared in either situation. Our positions are calculated such that I know what my risk is if I'm wrong. If I'm wrong, that's fine. If I'm right, great. On to the next trade.
Dropping the ego, I think that's a big part of surviving this business.
100%.
Todd,
100%.
What do you think makes Elliott and options so compatible?
Yeah, it's a great, I'm glad you followed up on that question. It's just, there's two schools of thought with option trading. And unfortunately, too many people who get into options trading just start buying premium and buying options. And it's great to look at, you can look at a stock at $100 and say, ooh, if I could just buy the 110 call, it's only going to cost me 50 cents. If the stock goes up to this level, I'm going to make so much money. Unfortunately, that's usually the avenue into option trading. And then they find out that not only do you have to be right in the direction, you have to be right in the time, and you have to overcome that strike price by the premium that you paid for the option. So if you buy, let's say stock's 100, you buy the 110 call, you pay $1, you got to get above 111 before you even make money at expiration. That's a tough pill to swallow, and you've got to go through that a couple times to find out that you've got to scale it back. So the purchase of an option and the sale of an option is what brings that threshold of profitability significantly lower. I love trading. I try to drop the ego as much as possible. Trade with an entry, trade with a target, and that target's based on an upside wave pattern, Fibonacci projection, extension, retracement, whatever cluster of zone. So if you have a spot where you think the move is going to originate and then terminate, that becomes the option you buy, the option you sell, and you're trading to hit singles and doubles. And I think that's really important. Now, if you think there are opportunities where you can try to hit a triple or a home run, you can structure option trades and various strategies that you could risk X to make 10, 20X. But you've got to keep in mind that with a huge reward to risk ratio comes the probability of success. The higher the return to risk to reward ratio you're going for, the lower the probability of occurrence. So you just got to structure. Do you want to try to put trades on, that you're making 1.5, risking 1, you might have a 60% chance of success, or risking 1 to make 10, you might only have a 15%. It all depends on the context that the wave principle gives you, where you are in the market. Do you think there's a huge wave 3 breakup or breakdown happening? Let's go for the bigger trade. Or if you're just looking for a little bit of a move, define the risk, buy an option, sell the option, define the area in which you want to operate. So it allows you to trade however you want. The last thing I'll say is you can buy options, but also if you say, as long as a correction stays out of this zone, I don't care what the wave 4 correction, how it unfolds, as long as it stays out of this area, whether it's a flat, a triangle, complex, zigzag, whatever it may be, you can sell options below that. You can make money however a correction or a trending move unfolds. So as long as it doesn't go down in that zone, and multiple counts can say we shouldn't pierce this zone, you can make money that way as well. So there's a variety of ways to trade options, and Elliot just gives you context that I think so many option traders are missing. Maybe we could hold this for another time, but there's a huge school of thought data that just sell options, sell options, sell options. And that's predominantly what's been taught in the retail market right now. And I think they're doing a disservice, because there are times that if you have an idea that a big trend move is going to come, you're limiting your profitability by just selling options. There's time to buy options as well. And that's why I feel so passionate that Elliot works so well with options. I think we need to rewrite the way options are taught to retail. It involves selling them as well as buying them. But the only way you can do that is you have context as to where the market is right now. And that, again, is from Eliot.
Todd, options can seem pretty confusing at first for a lot of people. What about the beginner? Do you teach a course that can help get an aspiring trader started, or do you think it's best to just jump right into your service?
You know, it's a good question, and I think whatever you prefer. If you're somebody who just wants to just jump in and watch someone do it, I structure my service exactly that. You know, as I execute trades, I record the trades, I show you how I calculate my risk, and you can follow me into the trade. And you know, if I'm risking, let's say, $1,000 or $2,000 on a trade, you could go down to a one lot risk $50 or $100. And the way we structure our trades, you don't have unlimited risk. So you can actually watch me trade real time if you just want to jump in. If you're somebody who's a little bit more, you want to prep for a while and paper trade, we do have various option trading courses for the beginner: how to buy an option, how to sell an option, what a bid-ask spread looks like, how to structure a debit spread or a credit spread. So yes, we do have full education. You can come in either way, either prepared, study with no live fire, or you can just come into the service, watch us trade. We do it live all the time, and whatever you prefer.
Todd, it's always great talking with you. I always learn so much. Thank you for your time today.
Thanks, Dana. I appreciate the time.